Good morning, students. How are you all? Hope you all are fine at home and be safe again. Okay, good. Okay, students, shall we come to our lesson? In accountancy, we are in the first lesson. We have learned how to find out the profit, how to calculate profit from incomplete records. Okay, how we have calculated by the preparation of statement of profit. How it was calculated means we are comparing the opening and closing capital. For that we have an equation, that is closing capital add drawings less additional capital, that will be the adjusted closing capital. If we deduct the opening capital, we will get profit. If the closing capital is more than the opening capital, it will be profit. But if the opening capital is more than the closing capital, then it will be a loss. Okay. So the missing figure also we can calculate if you know the equation. That's all. Okay. Now we will learn the next part. Statement of affairs. This is also deleted portion only. What we have learned. Okay. Up to that illustration and exercise 9, it is deleted portion. But all these are simple. The forthcoming problems will be asked for 5 marks. Okay, the previous one I have told you maybe for 2 marks, 3 marks they may ask. Okay, but this one will be the 5 marks questions. So it is easy to gain 5 marks. Okay, so you have to listen now carefully. So first, what is statement of affairs? Here you may know, if in 11th standard we have studied about the balance sheet. It resembles balance sheet, but it is not equal to balance sheet. Okay, both the things we will enter all the assets and liabilities. What assets and liabilities will be entered in the statement of affairs and in the balance sheet. Assets will be on the right side. Okay, the liabilities will be on the left side. Okay, this is what called the, from this we will come to know the financial position. From the balance sheet we will find out the financial position. Okay, from the balance sheet. But in the statement of affairs, we prepare the statement of affairs in order to calculate the capital. Okay, the difference also we will learn. Around 5 points there I will show in the book itself, because you have to learn as it is given in the book. Sometimes not, they have asked already even for 5 marks also. Okay, only 5 points available, so you should learn all the 5 points. Okay, so from the balance sheet we can ascertain the financial position of the business, but from the statement of affairs we will calculate the capital. So here if we prepare with the opening details, opening items, then we can calculate the opening capital. Or at the end of the financial, if we prepare the statement of affairs, we can calculate the closing capital. Okay, statement of affairs and balance sheet we will prepare. Here the statement of affairs, I think we will see one problem. Okay, how we write all the assets and liabilities we will enter as it was written in the balance sheet only. But here these assets and liabilities in the balance sheet, that means using double entry system, we get everything from the ledger account balances, because from the trial balance. But here how they get the assets and liabilities? Here they get the assets and liabilities either from their memory. Okay, some items from their memory, or some items from the source documents. Source documents when they purchase something, no? For example, land, they will get from the source documents. Okay, and some from the books of accounts they will maintain. Okay, so from the books of accounts they will get. So we can say this is not reliable. We cannot rely on this this balance, that statement of affairs. But we can rely on the balance sheet, because that by using double entry system we get the balances of assets and liabilities. But here we never maintain the ledger accounts, but we get the information from either from source documents or from memory of the owner, or from the books of accounts. Something he will enter, so that one he will get from the books of accounts. Then if there is any that errors or omissions take place, it is very difficult to trace them out. Okay, difficult to find out. To locate the error is very difficult. Okay, but in the balance sheet we can locate the error, whether it is equal with the balances of assets and liabilities. Okay, now we will see one illustration, that is sixth illustration. Okay, first I will show the differences. You have to write it down in the notebook. Okay, these are the differences. It is one of the 5-mark question. Okay, 3 they will ask, but they may ask in 5 mark also. Difference between statement of affairs and balance sheet. Okay, the objective. Statement of affairs is generally prepared to find out the capital of the business, but here to ascertain the financial position of the business, what I have explained to you. Okay, then accounting system, here it is prepared when double entry system is not strictly followed. Okay, that is called, why it is called statement that incomplete records, isn't it? But balance sheet is prepared when accounts are maintained under double entry system. Then what's the basis of preparation? It is not fully based on ledger balances. Wherever possible, ledger balances are taken. Some items are taken from some source documents and some items are mere estimate from the memory. And it is prepared exclusively on the basis of ledger balances. Then reliability, it is not reliable because it is based on incomplete records. It is reliable because it is prepared under the double entry system. The last point, missing items. Okay, it is difficult to trace the items omitted as complete records are not maintained. Okay, that means it is difficult to find out or locate the errors. Since both the aspects of all transactions are duly recorded, items omitted can be traced easily. Okay. So, shall I show the sixth illustration? Then I will do and show the sixth exercise. Okay. Just I will show you. Following are the balances of Shanti as on 31st December 2018. Bills receivable, bills payable, machinery, furniture. Then here sundry creditors, stock, debtors, cash. Prepare statement of affairs as on 31st December 2018 and calculate capital as at that date. Okay, see, we are now writing the books of Shanti, then statement of affairs as on 31st December 2018. Write all the asset side item. First one, that means the assets which can be converted easily into cash. Okay, on the basis of liquidity they have arranged. So cash will be the first one, then stock, debtors, bills receivable, then only fixed assets, machinery, furniture. Then sundry creditors, there bills receivable, bills payable. Find out the difference. Here 1,95,000, there 29,000. So subtract, you will get 1,66,000. Okay, that is the capital balancing figure we should write. You don't bother about that walking up the dog. Okay, I have stopped the video for 5-10 minutes and I was waiting, but it was not stopping. Okay, going on barking. Okay, so don't worry. I was not able to commit the video in the morning. Since it is night, it is doing its work. Okay, so sixth, problem I am showing to you. Okay. See, following are the balances in the books of Thomas as on 31st March 2019. Sundry creditors, furniture, land and building, sundry debtors, bills payable, cash in hand, bills receivable, stock. Okay, same thing. Prepare a statement of affairs as on 31st March 2019 and calculate capital asset that date. Okay, so I will show you how to prepare the statement of affairs. For the preparation of statement of affairs, we need to have 2 pages. Okay, 2 pages, but if I use both the pages, I cannot cover the full page in the video. Okay, you cannot cover the full page. You see, 1.5 page only can be shown. Okay, or I can show, but here off will not be seen. Okay, so okay, I will let me use both the pages. Okay, statement of affairs. First in the books of Thomas, that we have to write first. Okay. In the books of Thomas, statement of affairs. As on date 31st March 2019. Okay, here assets, here liabilities we should write. Asset side, on the basis of liquidity, the current assets we have to write first. Okay, there we should write first one, cash in hand. Okay, cash in hand. Cash in hand. Cash in hand 20,000. Okay. Then bills receivable. All current assets first we have to write. Bills receivable 60,000. Then stock, closing stock 2,20,000. Then sundry debtors, sundry debtors 3,20,000. Sundry debtors. Okay, all the current assets over. Now we have to write the fixed assets. Okay, fixed assets. Furniture. Then 80,000 furniture. Now land and building. Land and building only we can convert it into cash. Very difficult, with difficulty, isn't it? That's why we write that one at the last. Okay, land and building 3 lakh. Furniture, everything written. Okay, now the credit side. Sorry, this debit side. Here no debit and credit side. Here it is only asset side, liability side. So liability side we have to write. Liability is the current liabilities first. Okay, so sundry creditors, bills payable. $1,20,000. Now we should calculate the difference. For that purpose, we have to total the asset side first. Okay, 1, 2, 3, 0, then 4, 2, 0. Fifth one, 8, 10, 12, 20. 0. Balance 2, 4, 7, 10. 10 lakh. Okay, so that you write here also. 10 lakh. Okay, the balance remaining we have to calculate. Okay, 3, then 4 also 0. Here 2 there, so 8, then 10, balance 1, 7, 8, 8 plus 2, 8 plus 2, 10. So 2,80,000. And so you have to write as capital. In the bracket, balancing figure. Okay, that exercise 6 number only you have to write first. Okay, number you have to write first. Okay, then only the heading, then this left side liabilities, right side assets. Now we will do the seventh problem. Okay, here seventh one more thing is there. That means we have to calculate first the capital, then we have to find out the profit. What that means? Statement of profit. Yes. On 1st April, Subha started her business with 1,20,000. This is the opening capital. She did not maintain proper books of accounts. Following particulars are available from her books as of 31st March 2019. Then bank overdraft, debtors, bills receivable, computer, machinery, stock in trade, creditors, bills payable, cash in hand. During the year, she withdrew 30,000 for her personal use. She introduced further capital of rupees 40,000 during the year. Calculate her profit or loss. Okay, so first we have to calculate the, we have to prepare the statement of affairs. Okay. Statement of affairs. First you write the number. Okay. Number is 7. Then in the books of. In the books of Subha. The statement of affairs. As on 31st March 2019. Then here assets, liabilities. Okay, first the current assets we have to write. First cash in hand. Cash in hand, 60,000. Then stock in trade. $1,60,000. Then bills receivable. Bills receivable 70,000. Then debtors. All current assets we have to write first. 1,80,000. Debtors. Then okay, current assets over. Any fixed assets? Yes. Computer, machinery. So first computer. 30,000. Machinery. machinery 3 lakh. Okay, now asset side, liability side. Liabilities, current liabilities first. Bank overdraft. $50,000. Then creditors 90,000. Creditors 90,000. Then bills payable 2,40,000. Okay, now return. Total items we can count here. Okay, here 5 plus 4 9. Here how many? 3. Here 6 plus 3 9. Okay, 9 items we have entered. Now you total the asset side. Asset side how much? 1 2 3 4 5 12 19 27 30. Balance 3 4 5 8 lakh. Write the same amount here, 8 lakh. Okay, now we find out the remaining amount. 3 0. Okay, 4 also 0. 5. Okay, here 14 plus 4 18. 18 plus 2 20. Balance 2 4. 4 plus 4 8. Okay, this is capital. Then balancing figure that we have to write. Okay, balancing figure. Now we will prepare the statement of profit. Statement of profit. For the year ending, you can write. Okay. Now, rupees particulars. Rupees alone I will write. Okay. First, closing capital. Closing capital, what we have calculated, 4,20,000. Add drawings. Drawings given, isn't it? How it is given? Drawings. During the year, she withdrew 30,000 for her personal use. So, 30,000. So, we will get to 4,50,000. Okay. Then less, additional capital. Additional capital. Additional capital 40,000. If we deduct this one, 4,10,000. This is adjusted closing capital. Okay, then less opening capital 1,20,000. We will get profit. 11 minus 2, 9. 3 minus 1, 2. Okay, so this is called profit made during the year, or simply we can write profit. Okay. Okay students, we have completed this one, 7, then 8, 9, 10 we will do tomorrow. Okay, 8 and 9, the next one 10 onwards, the next 20. Okay students, so okay, thank you very much.